TheoTrade. This is Don Kaufman. It's November 28th, 2025. It's Black Friday. And here at TheoTrade, well, we have a Black Friday special for you. Allow me to share screen here and get right into it again on this Black Friday. Well, this one comes down to quite simply, when we first started off TheoTrade, we came up with this kind of incredible special for a full year of total Theo at $799. Last year I promised, I was like, oh, I'm done with this deal. Literally, I'm done with this deal. We've done it time and again. I wanted to do something a little different this year. I wanted to do something what I would consider special, and we're doing exactly that. This year here at TheoTrade, and this is it for us in terms of the $799 deal. We're going to give you a Black Friday offer where you're going to get a full year of total Theo for $799. And we will give you the full $799 credit back to you for any other product here at TheoTrade. That credit, is good until you effectively use it. There's no expiration associated with it. So I want to be very clear about this. On this Black Friday, we offer you a very special deal. It's $799 for a full year of what we term total Theo. That includes the 3 trades a week. We're broadcasting, over 7 hours a day right now here at TheoTrade. Includes all of it, all of the archives of the previous classes, all the archives of the previous coaching sessions. It's yours. And again, you get my 3 trades a week associated with that. It's $799. But then we're going to give you the entire $799 back in a credit towards any other product you would like to use here at TheoTrade. With that, just go to theotrade.com/799. Again, theotrade.com/799. The deal is ending, obviously, very, very soon. With that, let's get into it. Let's actually talk a little bit about the markets here, of course, in this TheoTrade weekend update. So I'm actually going to keep the camera on the entire time, if that's okay with everybody. Let's get into it here. So the volatility fuse has been lit in this marketplace, and that's really the topic of conversation here, of course, in this TheoTrade weekend update. It's kind of an interesting week, right? You get 3.5 days of trade. You're not really expecting anything. It feels like holiday trade. For those of you unaware, the Chicago Mercantile Exchange had a serious systems failure dealing with a cooling system, one of their server farms, and they went completely dark for 10 hours and then effectively reopened, and we just didn't trade any volume at all today. And by the way, that system failure, it happened, and again, I'll just show you kind of happened from Thursday into Friday, system failure for over 10 hours. System goes dark. They reopened that marketplace, and you can see we're just like the last trade. It's kind of in the middle of the evening here, and that was, of course, on Thursday. It was on Thanksgiving. The marketplace reopens, mildly higher. Like, it didn't get crazy. Like, people were like, "Oh no, the market's not open. It's going to get crazy." The most interesting thing, the Chicago Mercantile Exchange, they didn't even warn us when they were going to reopen the markets. They literally didn't say anything to anybody. They just reopened them. Apparently, they told all the market makers and the professionals, but not the retail trade. So not too pleased about that. They'll be getting a strongly worded email from me. They really will, too. Anyway, they reopened the markets. Nothing crazy going on. And we actually did incredibly light volume on this half a day of holiday trade. The S&P futures only did about 400,000 contracts any given day. Lately, they've been doing like 1.5 million contracts. 1 million contracts would be light recently. So, we're rocking, absolutely nothing today. Just nothing to show for it. Now, as I was saying, let's get to the crux of the weekend update here. As I was saying, I was starting the SPX because there was the feeling of this, holiday trading week. And that's why I was getting into that a little bit. 3.5 trading days. So I'll show you. There's effectively, and again, it's really detail this because some amazing price action. You got 1, 2, 3.5 a day today, right? The reason I'm actually bringing this up in such detail, we basically started in the SPX at 6,600 in the week. You can see we ended, at 68, roughly 50. So what do you got? It's a week that was actually anticipating, and again, I want to be very clear about this, the expected move, that's what we're implying the movement to be. We're looking for plus or minus, $146. Actual move in here, holy crap, we moved 250. We moved 250 points. And The one thing I want to point out about this is, like, I'm well aware, and we're going to talk about a volatility crush. Okay, and we're going to look at that in quite some detail. And I'm really well aware, like when you guys look over at VIX, you probably think to yourself, you're like, oh man, but look at VIX, man, this rally is on. Okay, I agree. Okay, we've rallied a little bit. We've laughed, we've cried. We rallied 250 handles, and the volatility in VIX. And people, I think, that are a little newer here still look at VIX a lot. I'm not a big advocate of VIX. I've never been a big advocate of this, the VIX. I often call that my predecessor's volatility indicator. So the VIX actually crushes down. We're all the way back down to the 16 handle. It's a huge vol crush. There's no question about that. But the VIX, okay, is a function of SPX 30-day implied volatility. I've also noticed, though, let's further this because the VIX crushed pretty good. But let's further this. Let's also look over at the VVIX. Okay, so the vol crush is also really substantial inside of VVIX. Okay, big vol crush because we move 250 handles higher. Okay, time out right there. So there's two major vol crushes in here, and we're actually going to show you what back month vol looks like in just a moment, which is interesting. But before I go any further, look, this is part of volatility. It's just, let me get off the SPX. Let's actually cruise over to the spiders. And the reason I want to go to the spiders cleans up the chart a little bit. I want you to see, that we've come completely around the house over here, where what you've actually seen thus far, you had some volatility kicking in a high gear. And this is all the way back October 10th. It's a big sell-off on October 10th. On October 10th, precipitous sell-off. We rally back, hit all-time highs. Participate in another big sell-off here, bounce, rally back very near all-time highs. This one, rally back. How many times do you guys have to actually watch this to actually realize that you're in the midst of some, what I would term, prolonged volatility? Okay, that's my argument for the entire weekend update over here is I don't care what people think of, oh, we could hit all-time highs. The volatility, that fuse was already lit. Okay, it's on at this point. And, I can sit here and try to, convince you based on volatility, but I just want you to recognize something. Markets, they're not going to go off quietly into the night. That was never the game plan over here. What you're seeing right now, though, is how trade, gets systematically kind of dismantled. And what I mean by that is retail traders, they go in there and they've seen now how many times, the market's impervious to sell-offs. You saw it here. It's impervious to sell-offs. You saw it here. It's impervious to sell-offs. You saw it here. How many times do you have to see that before you actually start to believe it? Because you've seen it for what? That's just in recent times. It's impervious to sell-offs over here. Need I actually pull up? Here's 9 months. It's impervious to every single sell-off. And we're just basically bouncing back to all-time highs. Meanwhile, though, a lot of sectors you're going to find out, and a lot of individual stocks, are getting hammered upon. They're getting hammered upon. And I'm going to make that point in just a moment, the not so magnificent 7. But we're just a stone's throw off the all-time high. But I want you to remember next week, the week after, I don't care. There's going to be a Christmas rally. The hell cares what you think? It's not about what you think. It's about what you know. And you've actually seen some volatility in here. And the only thing standing between you and that volatility, is what? Got a little bit of Nvidia, maybe a little bit of Google. That's it. That's all you have right now. Is Nvidia and Google standing between you and extraordinary volatility. So whether we hit an all-time high or not, that's not even up for debate. Who cares? Doesn't matter. Got a lot of pressure. Let me actually show you exactly what I mean in this particular context. So in the spiders, I'm going to show you a year to date. And I'm going to keep the year to date. I'm actually going to write it up over here. Spiders on a year to date, I'm going to round it. It's 17% year to date. Guys, with me, 17% year to date. That's where the spiders happen to be. Okay. Now, let's cruise over to a major sector like the financials. Are the financials, on the leading or lagging edge of the year-to-date returns in the S&Ps? And, well, the financials are up 10.62, so they're on the lagging edge of it. Okay, so the financials haven't really helped the markets at all. Okay, let's look at the energy sector. The energy sector, that's been hot lately, right? That's up 4%. They suck. They can't get out of their own way. And by the way, most of that 4% was the last 2 to 3 trading sessions. Before that, it was flat. Okay, so we recognize that financials and energy are completely taken out of the equation. By the way, both those sectors added up don't even equal Apple anymore, but that's a whole different. Let's actually show you the Magnificent 7. If you bring up Apple, it's up 14% in the year-to-date basis. Most of that 14% is literally, okay, since the October 10th kind of low. Okay, the thing was flat on October 10th. It's actually rallied now. It's up 14% since October 10th. Pretty amazing, but it's only up 14%. So it's on the lagging edge. Okay, it's actually, if you will, pulling down the S&Ps. If you take a look at Amazon, what's Amazon done? Absolutely nothing. They're up 5%. Take a look at Microsoft. Okay, you got me. You know, Microsoft is basically in line. This was one of the hottest areas. Okay, that's one of the hottest areas. Basically, I'm going to call this one, it's flat. It's in line with the S&Ps. You do realize, though, that Microsoft just the other day was up 32%. So Microsoft, okay, waning in the distance. And I got to tell you, in Microsoft right now, some sell-side activity, a bounce, sell-side activity, a nice bounce. This might be a good fade, meaning I may actually want to short that. So we're through three of what used to be called the Magnificent Seven, okay? One of them is basically at par with the S&Ps. Everything else is crap. Okay, here we go. Google, 70%, okay? You did it to me, Buffett. You did it to me. But anyway, Google's up 17%. This is obviously on the leading edge of it and actually pulling the entire marketplace. Then you look at Meta, okay? Meta's had an incredible bounce. It was actually down, like, you know, last week. It was down on the year last week. It's had an incredible bounce. It's actually up right now, 8% year-to-date basis. Of course, Nvidia, though, is only up 27%. I'll call it 28%. 28%, last but not least, Tesla, up some 13% on the lagging end of this. As I said, the only thing really pulling markets higher right now are Nvidia, okay, and Google. What else you got? And somebody's going to be like, excuse me, can you pull up what? You want to pull up some Palantir? You want to, challenge me a little bit over here? Guess what? It's up 124%, but it's kind of an afterthought, isn't it? Because what? Its market cap isn't but 400 billion. But people, Nvidia is moving at $300 to $400 billion a day. Nvidia had a day, okay, during its earnings where literally the market cap moved $1 trillion, okay, in like a 48-hour period. So what do you think, like Palantir? Of course, I know it's up, it's up 124%. Nobody gives a damn. They don't care because the bottom line is it doesn't even make a difference. It's not even a wart on the side, if you will, of Nvidia. Okay, it's inconsequential. Everything is. Nothing matters anymore. You have two underlyings driving this marketplace. That's it. And you got to realize that right now the volatility fuse is lit. As long as these two underlyings substantiate gains, you're like, we're going to be okay. Maybe. Okay. Or, as I said a moment ago, maybe Microsoft starts to fade. All right. Well, you got problems here, big problems, because products like this thing is under serious duress. And again, I want to show you Microsoft because I find it one of the most interesting. I'm not telling you, okay, I'm not sitting here to preach to you the direction of the marketplace. Okay. But I am going to tell you right now, when you're getting this many sectors hit, when you have two stocks that basically own the marketplace and you're sitting there and thinking like, it's going to be okay. They're going to save it no matter what. Okay. First of all, who's they? Okay. You think the Fed actually has control of two different products in here? They don't. Okay. They're going to cut interest rates. They're going to juice these markets when and where they can. But in the near term, you're going to be substantiating a lot of volatility. But I just wanted to show you, like in Microsoft, how steep the decline has really been from this recent high, okay, to where we're presently trading. You're still actually down what? Okay, 10, 11% to some of the lows over here. It's a 16% decline. There's some wild, wild moves that are happening in the marketplace. And I feel like it just goes by the wayside because the S&Ps, they're owned. Okay, it feels like, a takeover of the S&Ps has actually happened. Who owns them now? Nvidia and Google. It's that wild. That's why I wanted to start with just a little bit about volatility, because I'm back here to the SPX again. This is where I started a moment ago. So why am I back to the SPX? To point out, now when you look at this 250-point move, you might look at it differently, because this 250-point move, okay, is a sign of volatility. That's just part of it. This is the quintessential rip your face off rally. Okay. In the midst of some of the biggest sell side activity that I've ever seen, in the midst of the biggest volatility I've ever seen, it's always the up moves that are the hallmark, if you will, of real volatility. And in my opinion, okay, that up move right there, that substantiates tremendous amounts of volatility. We're almost 2 standard deviations out. Like, again, if you look at this in terms of standard deviation, you're expecting this $146 move, tried to the corner and missed. You got 250 out of it. It's freaking ridiculously large moves. Okay. And again, keep that in mind moving forward. So the not so magnificent seven. Nobody calls it the Mag 7 anymore because it's gone. There's two stocks really that are outperforming. Everything else is worth nothing out there, right? They're dragging on the S&Ps other than Microsoft, which is massively unchanged versus the S&Ps. There's a big vol crush. Big vol crush. And I was covering that. And I really wanted to emphasize like, oh yeah, the VIX is getting the crap kicked out of it. And, oh yeah, the VVIX is getting the crap kicked out of it. And oh yeah, the volatility futures. Oh, the volatility futures. Yeah, except when you look at volatility futures, stop looking at a chart. Okay. Do not dilute yourself to be looking at the chart. What I want you to look at in volatility futures is back here. What's back here? Look at like the 54-day volatility futures, the 82-day volatility futures. All I want you to see in here, okay, like Jan is trading at 1981, okay? That's still a really high number. There's a huge, what we term contango going on. What's the contango? That's just, it's like the differential of the here and now, which is actually low volatility. And then you look out to Jan, and the volatility is actually kind of high. And I'm surprised by this, and I've been talking about this a lot lately. I'm surprised by it because normally when you see such a volatility crush, usually see stuff like this start to crush too. This is not crushing. February is all the way back up, okay? It's almost 21. It's 20.75, but it's almost 21 vol. That's not necessarily to be taken lightly. So I think that part of the reason the volatility is up over here, people are like, well, there's going to be more earnings coming out. Okay, I can get past that. Well, there's going to be maybe another government shutdown. All right, I get past that. How about the marketplace, okay, has already figured out there's two underlyings holding the whole thing together. And the great reset comes in January, and I think that they're already positioning for more volatility. Okay, I think you need to be positioning more volatility like right here and now. There's a lot of problems out there, okay? Speaking of those problems, so back month volatility. Okay, if there's a big takeaway here in the weekend update, back month volatility is still positioning, okay, that we're kind of like, you know, as I called it last weekend, Mr. Toad's wild ride. And that's important to know that. That hasn't really changed. Like, again, I believe, like I call it the volatility fuse is lit, but I believe that we're in right now, okay, a duration volatility event, and that this bounce is nothing more than that. I'm not sitting here, you know, just screaming bearish, you know, tones. I'm not. By no means am I screaming bearish tones, because I'm going to be the first one to tell you, I do not believe that this marketplace resolves to the downside violently, okay? Not for a long period of time. I think we're just going to continue to, we're going to sell off and we're going to bounce. And every bounce is going to be a little bit more meager, and it's going to rope more people in. I call this the trader and the rope, where you're literally being drawn out of the shell. Like, come on, a little bit more. Okay. If you look at like margin balances and stuff right now in the brokerage industry, they've never been higher. That should be though, because we're kind of trading at all-time highs, but margin balances has never been higher. And that kind of freaks me out though. And I'll tell you why. Yes, margin balances should be at an all-time high. That basically means people are borrowing more money than they've borrowed before. But that makes sense because we're sitting near all-time highs. The part that doesn't make sense is that you just saw some pretty extreme volatility, and yet your margin balances are still really high. It's like the market is trying to scare you, okay? It's like chasing, you know, after you right now, and you're not reading all the signs, are you? Okay, your retail is not all there, because they actually do believe right now. The bell goes off like Pavlov's dog. You actually show up, okay? Where's my treat? I'm going to tell you, your treat's going to be more volatility. Use spreads to find that risk. I'm telling you, I did a little session the other day, specifically, okay, about mitigation of risk. You should tune into that. You should watch that again and again. We have all kinds of risk mitigation videos, because if you're not using spreads right now, you will get what I term systematically dismantled by this marketplace. That is not a friendly term. That's basically just constantly getting roped in and roped in and roped in and drawn out. Last thing, I did want to quickly mention a little bit about crypto. Crypto, it's had a decent bounce, okay? But the decent bounce is still very, very meager. It leaves a lot to the imagination in here, okay? What I'm implying with the crypto bounces, this, okay, is more like what the S&Ps, okay, maybe should look like. The S&Ps, though, they're hyperactive to everything because retail jumps right back in, but crypto has gotten decimated in here. The bounce is really meager. I'm actually surprised that we don't get all the way back to like 98,000 before seeing another bout of sell side activity. But I do want to make clear, I see another bout of sell side activity in here, and I don't want to sugarcoat that at all. I want you to know that I do not, by any stretch of the imagination, believe that the sell side activity is over inside of the crypto marketplace. I think that the bounce, though, needs to be stronger. In fact, if the bounce is stronger, I may be able to take advantage of it and short into the bounce. Okay, it's called bounce and fade. So when we bounce, I'm going to fade it. All right, continuing on. Again, volatility fuse is lit. The not so magnificent 7, because you just saw underperformance over there. Yes, volatility crushed. The back month, though, is higher. Crypto needs to bounce more. We're going to short it. Again, the last thing we always do here is talk a little bit about the SPX. Okay, with the SPX, so we had this magnificent 250-point move, and yet volatility got crushed. Next week, we're looking right around a $99 move. Just think of it as $100. So what's amazing is this past week, and I want to zoom in on this again because it is actually pretty ridiculous and kind of amazing here. This past week, we just went through this week. It was a 3.5-day trading week. You got this $146 move, right? And 3.5 days, boom, we 250 points. And now you're telling me we're going to go into a 5-day trading week, and they're only going to give an expected move $100. So they've crushed down volatility for this next week. Now, I know people want me to get drawn out into the conversation like, but the Fed is coming. The Fed is going to come and economic data is going to come out. And I agree. And all of that crap is only going to add to the volatility. And yet you kind of feel like volatility is crushed down. People, I'm telling you right now, keep your helmet on. Okay, we're going in. There's going to be more volatility to this marketplace. All right. With that being said, let's go. Again, Black Friday. I can't reiterate this enough. Over the years, we put a lot of deals together here at TheoTrade, and we've done everything possible to make this obtainable for everybody. It's $799 for the year, and then I'm literally giving you the $799 back. That credit is infinitely good for literally any product here at TheoTrade. The only thing I ask is you can't combine it with other Black Friday specials. Everybody always says that, right? But it's theotrade.com/799. Get in now. Okay. This will be the best special that we ever do here at TheoTrade. Literally. Okay. We're giving you an entire year of TheoTrade and allowing you to do whatever you want with that capital, with that credit. I want to thank everybody for joining us here at TheoTrade. Have a wonderful holiday weekend. Bye-bye.